technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 18th day of September, 2015. Let's take a quick look at the numbers. The S&P is down 18 points. Dow is down 184 points. NASDAQ is off by 32, and the Russell 2000 is down almost 8. Crude oil down about 55. Gold rallying off of the Fed announcement. We're up $19.40. That's 1.75%. Asian markets, the Nikkei down 362 points. That's almost 2%. Shanghai up 13. Hang Seng up 66. And in European markets, the DAX down 3%, 313 points. FTSE down almost 1.5, down 82 points, and CAC 40 down 119 points, which is 2.5%. So, the Fed left the rate unchanged, and we discussed this yesterday. What do people really want, and what will they read into whatever it is the Fed does? And so, as you can see from my chart, prices did in fact explode to the upside once we found out there would be no change in the rates. Then not so much, and then not so much. So what do we want? Do we know what we want? What signal is the Fed sending us when they say the economy is not strong enough to withstand an increase of 0.25%? The one guy, the one dissenting vote, I think there was, he wanted to bump it not 1/4 point, but I think a full point. And that's dissenting. Happy Friday. This is it. We've all worked the week to get here. Friday, the weekend. I hope you got great plans ahead of you. Jerry Fagnant is going to join us today, along with David. After we go through our normal schedule, Michael will come in and do a recap of everything that happened in the live trading room today. I'll be here with a good word for the day. We'll take a look at the Concierge Trade Alerts from overnight. and then we'll chat for a bit with both David and Jerry from pagetrader.com. And the headlines today, Brazil is a disaster. Okay. Bad news on ISIS wasn't welcome. And Taco Bell suddenly shut down its new upscale restaurant. And hackers have found a way to seamlessly cheat at online poker. Big news day when that's the headline that grabs your attention. Hackers have found a way to cheat at online poker by using malware to take screenshots of the cards players are holding. A report says the practice had affected hundreds of players on poker websites such as PokerStars and Full Tilt Poker. The malware infects a player's computer, takes a screenshot of his or her hand of cards, and then sends the unique ID of the player to the hacker. From here, the hacker can find the player in the online poker rooms and play against the person with the knowledge of the other person's hand. That might make it a little easier to win, correct? ESET has been detecting the malware since March in various forms. Newer versions of the malware are better able to access other parts of the computer as well, such as passwords. While hacking online poker tournaments is rare, it's far from unprecedented, and there's very little that online poker companies can do to prevent it, as the malware is usually contracted from an outside source such as a torrent download. I have never understood why anyone would get involved with that whole torrent download thing where you're sharing your hard drive with other people. It just never sounded good. And if there's someone that uses it and can stand up for it and make an argument for it, gosh, I would love to hear it. I'd love to know why anyone would open up their computer. And that's what you're doing. You're literally opening up a portion of your computer to the world, and it's like, come and get it. Isn't that just asking for trouble? And you would say, well, that's what a web server does, right? But it's designed for that, and it's protected against those types of evils that lurk out there. So, if you play online poker, be careful. Be careful not only because of the malware, but I guess a lot of folks have gotten in a lot of trouble. It takes, if you got to get on a plane and fly to Vegas to play the poker, that's one thing. So maybe you go a couple times a year if it's something you really enjoy. But having it in your home, or even, I suppose I never thought about it, even on your cell phone. There's a hot card game in your pocket 24/7. You can see where, for someone who has an issue with gambling, where that could be trouble. All right. And in other headlines today, well, let's see what the bad news on ISIS is. Top U.S. military officials used subtle manipulation tactics to influence the outcome of intelligence reports on the fight against ISIS in the Middle East, according to analysts who detailed specific allegations from the growing scandal to NPR. Unnamed military sources told NPR that leaders at U.S. Central Command, or CENTCOM, had tougher standards for reports involving bad news and changed the wording of reports to make them sound less negative. When analysts wanted to include good news in a report, two military sources close to the investigation said they needed little sourcing. Bad news, meanwhile, required extensive footnotes and intelligence data to back it up. The bad news didn't just need to be footnoted. One military source told NPR the intelligence data itself had to be attached to the report. It became pretty clear if they wrote something bad, it was likely to be changed. Knowing that bad news on ISIS wasn't welcome meant that over time the picture of the fight began being rosier. The Pentagon is investigating accusations that top military officials pressured analysts into conforming their reports to a more positive narrative of the fight against the militant group ISIS, also known as the Islamic State. Why? It's obvious to some, but the language was also sanitized, according to the NPR report. A source described one report about an ISIS attack near the Iraq-Syria border. According to the source, the report initially said Iraqi security forces retreated, meaning they fled their positions, but it was then sent back for editing and later came to say that the soldiers reinforced another Iraqi position. The final draft suggested a strategic decision had been made, but that was not what happened, the source said. The Iraqi forces ran. A second source confirmed the account of the change in wording to put the Iraqi forces in a more positive light. So, I don't know, who does this serve? Does it serve the president, the administration? Does it not embarrass the Iraqi soldiers? There's something very serious, very wrong going on, and God help us to do something about it, to put some stop to it, to do something, some way, somehow. We need that desperately. All right, I did mention the chart I have up. If, by the way, you can't see the chart, then go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered all the way through the end of the month. Come the first of the month, we all register again. 30 seconds for 30 days. But that's how you can see the charts and access the chat box so that you can ask questions and be a part of the program. So again, homepage, CFRN.net. On the right-hand side, click the big microphone, follow the instructions. It takes about 30 seconds, and then every day after that, you'll get an email reminding you the show starts at noon, and that all you need to do to join is to simply one-click access. You're in like Flynn. So we'll go to Michael now, if you're ready, Michael.
Sure, I'm ready.
He's ready. He'll give us a recap of everything that happened today in the live trading room. The good, the bad, and anything we might have missed.
Yes, we did miss some. And we did. But it's alright. Alright, just FYI, the ES just dropped down below 56. So.
Did it? Okay.
It did. What was the initial target? 52?
Yeah.
I think so. Yeah. Okay. Nice. And Bert had sent an email about it, and I responded to him, but there was one thing that you needed to respond about. I CC'd you on it.
Okay. I had responded to him on something as well, but I'll see what it is.
Okay. Alright, so I'm going to hit the record button.
Okay.
And we'll get rolling. Alright, good afternoon everyone. Today is Friday, the 18th day of, I was going to say February, the 18th day of September 2015. This is our homepage. Alright, if you have not taken a free trial with us and you want to take a free trial with us, then just go here where it says register for a free trial, put in your name, put in your email, click register for a free trial, and you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the confirmation link, you don't get a free trial. Alright, you have to click the confirmation link to get the free trial. Yeah, once you do that, then we'll know you took it, and we'll send you all the information you need, okay? People who are clicking it like right now, Friday afternoon, we got to set up next week's passwords and stuff, so it takes a little longer for us to get it out to you. Okay, because it just doesn't make sense for us to send you this week's stuff because this week's stuff is done. All right, to view our live trading room results, you just click right here, and then you click right here, and there's our spreadsheet. Okay, and that spreadsheet goes all the way down here to the 18th of September. That is today. Today we made 4 ticks profit in soybeans, 2 ticks profit in the Russell. We lost 7 on crude. We made 23 on gold, and we made 4 on the euro. So I believe we're up to 280. I think these 3 columns cancel each other out. So we're up 230 here and 50 there. So we're up 280. Today it took us 7 minutes and 3 trades to get to our goal for the day, and we took a total of 24 trades today. On the month, we are now up $3,105 a contract. Okay, $3,105 a contract, and that's over 13 trading days, averaging $238 a day. On the year, we are now up $44,840 a contract. That's over 174 days, averaging $257 a day. Okay, that is where we stand on the day, on the month, and on the year. All right. So now I will get to the trading. All right. Here on the ES, for those of you who are doing the 1 trade a day thing, I'll let Dwayne cover that. I'm not going to steal his thunder. Sorry, I didn't mean to do that the last time, Dwayne. Those of you who are doing it, good for you. Those of you who are not, well, you're missing out. Looks like I didn't identify any trades here on the ES today, but looking from here to here, we were in and out of the weekly trading zone. It doesn't look like we had anything in here except for this one right here. We had a long trade right there. That was after the live trading room. Then we would have a short trade right here. Again, after the live trading room, another short trade right here. And that's it. Okay. Yeah. The ES right now is looking to get down to, it looks like, right down there. Send them again. All right, on the gold, let's see, on gold, we had 23 ticks today. So we had two 10-tick trades and 1 3-tick trade is what it worked out to be today on the gold, and a break even right there. Okay, so we had this 1 break even trade right here, and we missed a short trade right there. That would have been a nice trade to have. We got 10 ticks profit on this one, 10 ticks profit on this one, and I don't know why we didn't get long right there. We should have gotten long right there. I just missed it, I guess. And 3 ticks profit on this one. Since we closed up the live trading room, gold has just been kind of flat. If there is an up close on this bar right here, it would be a long trade. It would be going right into dynamic resistance, a red MA1 with a red cycle. Actually, I'd have to draw a trend line on that and see. It's got to close above this trend line. Okay, that's what it needs to do. Okay, so the gold, we made 23 ticks on that. Okay, in the Russell, we had just a couple of ticks profit. Let's scroll all the way back here and see what we did. All right. Our first trade on the Russell was right here. We made 3 ticks profit on that. Next trade right in here, we made 2 more there, got us up to +5. This one got us up to +6. And then we stopped out, put us down to -2. Had a break-even trade there. Looks like we missed a short trade right here. Let me me highlight that a little better. We missed a short trade right there. We missed a long trade right there. Looks like another short trade over here that we missed. Okay. Another one right in there and there. Yeah, I missed a lot of trades here. I don't know what I was doing missing all those trades. But anyway, at this point we were at -2, I believe, right? And then you know what, one of these trades I didn't miss. I got 4 ticks profit on to put us at +2. I don't know which one, but one of those I got I got 4 ticks profit on and got us up to +2 on the Russell. Let me just go back and look at this. 1, 2, 3, 4, 5. Yeah, because I have 6 trades that I counted for the Russell, and I only show 5 on here. So one of these we got +4 on. I don't know which one. Sorry, guys. I actually did it. You blame it on the communion wine? They serve communion wine. I'm Catholic. The priests are the only ones that get the wine. Richard, yes, that is true. Okay, so anyway, on the Russell we ended with +2. Crude oil. Crude oil. Yeah, we had a bunch of trades on crude. My first trade on crude was right in here. I made 5 ticks profit on that. Is that right? Oh yeah, okay. I remember what happened here. I made 5 ticks profit on this. Then this trade here I messed up. I got 2 ticks profit on that, but when I went to move my stop to break even, I accidentally placed a second order on, and then it took me out of the initial trade and then put me long, and then it started moving up, and so I jumped out of it and I lost 2 ticks. So this ended up being a break-even transaction right here for me. And then I stopped out over here. So I went from +5, break even for these 2 trades, -3 here. Then I got 1 tick profit there, putting me at -2. Then let's see. Okay, putting me at -2. Then I got back to break even. Okay, putting me at break even. Then I had a break even trade. Then I missed this nice long here, a little short there, and I stopped out here. I missed that one. I stopped out here, putting me down to -8, and I got 1 tick profit there, putting me at -7. Break even there, and now you can see the crude during the break moved down quite a bit in here. There was a shorting opportunity, a momentum short right here for that move down. Nothing on the long side until over here. There was a long trade right in there. Nothing really on the short side until right here. A short trade right there. And then another short right over here. Okay, and that was it on the crude. On the crude, we were at -7 on the day after we stopped out that one time. What is this? Soybeans. On the soybeans, we had just the 1 trade right here, and we made 4 ticks profit on it. We had a huge move down here in the morning, and then we missed this one and this one. I was saying it was going to get down to, I kept saying it's going to get down to 870. It did eventually get there, but it was over here, right at the close of the live trading room. All right. The euro. On the euro, we had a couple of 2-tick trades. All right, we had this one right here. We made 2 ticks on, a break even here, and 2 more ticks here, getting us to +4. All right, and that was that. That was all we had. Okay. All right. Hey, that was the last market. All right. So with that, guys, I am going to bring my spreadsheet back up, if I can find it. Here it is. So the results were +4 on soybeans, +2 on the Russell, -7 on crude, +23 on gold, +4 on the euro, It took us 7 minutes and 3 trades to get to our goal for the day, and we took a total of 24 trades. Okay, so on the month we're now up $3,105 a contract. That's over 13 trading days, averaging $238 a day gross. On the year, we are up $44,840 a contract. That's over 174 trading days, averaging $257 a day. Okay, so there you have it. 24 trades today, John. And did I do GC? The gold? Yeah. Yeah, on the gold, we had 4 trades and 23 ticks profit. Okay. Now, if you have not taken a free trial with us, just go here to where it says view. Just go here where it says register for a free trial. Put in your name, put in your email, click on register for a free trial, and you'll be sent a confirmation link. Okay. Click on the confirmation link, and you get a free trial, just like that. If you want to see the spreadsheet, it's available to the public. You can just do view live trading room results right there and right here to view our daily results spreadsheet from today back to January 2nd of 2013. Just click here. And there it is. Okay. I feel like we should make a big spreadsheet button. Just to get right on the home page. It says spreadsheet. Just thought. Anyway, that's it, guys. With that, we are going to head back out to Phoenix, Arizona. There, stop recording. Phoenix, are you in the house?
Yeah. Yeah, I'm back.
Okay. All right. So, the recap of the recap. If you're ready.
I'm ready.
And it took 7 minutes and 3 trades to get to $100 a contract. 7 minutes and 3 trades.
7 and 3, that's pretty good.
Yes, yes. Worked out much better today. Once the FOMC was gone, then we had some good volatility again. Thank you, Mrs. Yellen.
So what do you think about that?
I thought yesterday, when the Philly Fed came in as bad as it did yesterday morning, I was almost sure there was going to be no change. I don't think the economy is in good enough shape to bump it. That's my opinion. My humble opinion. Yeah, the Philly Fed was supposed to be +6 yesterday, and it came in at -6. So it was way off. And the Philly Fed is a survey of 250 manufacturers in Philly, what they think the economic conditions are. So that right there was a sign to me. And when the Philly Fed came in so low when that news came out yesterday, the market started to run, which logically makes no sense because bad news like that should make the markets go down. But I think they were saying, with the Philly Fed coming in like that, everybody was thinking like I was, and that there's no way they're going to raise the rates. That was all my analysis of it yesterday. So we had a little window into my head. I guess everybody gets that every day when they're in the live trading room.
What's that?
A little window into my head.
Oh, yeah. Absolutely. Okay, I've got the charts back. All right, let's get into the good word for the day. We talked yesterday about prayer, and we said it would be a few days about prayer, that we would talk about what it is, what it isn't, something we say we do, talk about doing, but how often do we do it, and what is it really? So it's called Different Ways to Pray. This is part 2. Isaiah 37:14. Hezekiah received the letter from the messengers and read it. Then he went up to the temple of the Lord and spread it out before the Lord. Now, this is not for the squeamish. Hezekiah, king of Israel, received a threatening letter from a much more powerful king, the king of Assyria. The Assyrian potentate demanded unconditional surrender and told Hezekiah not to trust in God. The letter was graphic, warning that resistance meant the Israelites would have to eat their own excrement and drink their own urine before they died. 2 Kings 18:27. So Hezekiah went to the temple and spread it out before the Lord. Then he prayed, God of Israel, enthroned between the cherubim, you alone are God over all the kingdoms of the earth. You have made heaven and earth. Give ear, O Lord, and hear. Open your eyes, O Lord, and see. Isaiah 37:16 and 17. Hezekiah basically said, Lord, would you read this, then do something about it? And God did. Indeed, what he did was spectacular. Then the angel of the Lord went out and put to death 185,000 in the Assyrian camp. When the people got up the next morning, there were all these dead bodies. That's Isaiah 37:36. So, what piece of paper would you like to spread out before the Lord? A financial statement that's overwhelming? A divorce decree? A medical diagnosis? An angry email? Any piece of paper that causes you stress can be an invitation to prayer and a candidate to be spread out before the Lord. If it's important to you, it's important to Him. You say, I've never done anything like that before. Well, try it. Give it to God. Trust Him. And watch how He works things out for you. And that's a good word for the day. Now, it said, whatever it is, spreadsheet, medical report, in your prayer closet, wherever that might be for you. Just go there, lay it out, spread it out, and pray it out. Talk to God. He does listen. And if you listen, He answers. And that really is our good word for the day. That's part 2 of 5. We'll pick up with it on Monday. So, S&P 500 Emini Futures. We have a swing low so far in this hour of 1953.50. We have a weekly trading zone down here at 51.52. This was the Globex Open Sunday night. We spent some time back and forth between the 51.52 zone and the 59.60 area. We made it as low, even put in a double bottom down at the 36.37 weekly zone. And then we did a leg and a retrace and a leg and a retrace. And then yesterday on the Fed announcement, this was our highest weekly zone for the week, 2016/17. We got as high as 2011.75. So we didn't quite get there, but it was close. Now back down in the following hour, we came just right back down and consolidated below the 81.82 until this was the London Open right here. And in the following hour, we began a sell-off that took us into the Wall Street Open, and we got all the way back to the zone at 51.52, where we have spent some time already this week. We put in this little tail down below the zone, and we bounced, got up above 59.60, but we didn't hold above it. In the current hour that we're in now, we pushed back down through it, and again the low 53.50. Now, as far as the Concierge Trade Alerts from last night, on the S&P, we said to consider being short below 1969. We triggered it, and we put in a swing low down at 44 and a quarter. So from 69 to 49, well, that would be 20 points. So we actually made a 25-point drop there. What's our goal for the day? 2 points. This is a 25-point drop. It was available to everyone who got their alert last night, their email. And price did come back and attempt to test that area. You know, important prices, important areas, almost always tested. The swing high here was 67.50, so we didn't quite get back to 69. And now we're in the midst of this decline. Okay, let's go to 30-year bonds. So bonds have done the opposite. The alert said to consider being long the bonds above 145.03. In this hour, we made it up to 154.17. So that's a 14-tick rally. Back below. And this time we put in a high at 155.15. From 154.03 154.03 to 155.03. That's $1,000 per contract move. Do we expect you to get all of that? No. Just showing you what it looks like. And that is what the market made available. See, after this first initial move up, we had a drawdown here that came back to 153.31, and so that would have been a 5-tick drawdown. And on bonds, we're only willing to risk 4 because we're only looking to pick up 4. So we never risk more than what we look to achieve. Okay. You will find out there some methodologies that encourage you to risk more than you can achieve, but that's bad science, and you should really stay away from that. Okay. Crude oil last night, another example, short below 46.20. We got below 46.20 right here by the tune of 3 ticks. Crude oil, we need 10 ticks to be done for the day. Reversed, came back down through, and this was a $1,000 per contract move in crude. And now we've had some back and forth. Now the long side on crude was 47.15, which was way up here. So, and this was when the alerts went out. 2200. So we never triggered on the long side, just on the short side. Okay. Soybeans. Oh, and a reminder, we will be rolling, I think Michael may have already told you, but over the weekend we will roll to November crude. So that will be X. So when the alerts go out Sunday night, it will be not GCLV, but GCLX. Okay. Alright, so soybeans, the alert last night said to consider being short below 878. Two pennies in soybeans is the same as 2 points in the S&P. There's 4 ticks to a penny, 4 ticks to a point. $50 per penny, $50 per point. And we dropped all the way to a low of 868. Okay, what have we not covered? The Dow. Let's take a look. $2,200. On the YM, consider being short below 16,500, and that was right here. Almost get it straight. Okay, 16,500. There we go. And we put in a swing low all the way down at 16,274. Now we're only looking for 100 points, or 20 points in the Dow. It pays $5 per point, so 20 times 5 gives us our $100 per contract per day. Okay. And I think that covers everything. Nope, we've still got the euro to go. Alright, on the euro, long above 11,470. The swing high was 76. So on the long side, we're looking for 8 ticks, so that would result in a stop out. On the short side for the euro, short below 11,390, and we just, let's see, well, we put in a low at 367, so that's enough to compensate for our 8 ticks. And then the final was the Russell. There we go. This is the last one. So consider being short on the Russell below 1172, and that would be right there. Now, on the Russell, we only need 1 point because the Russell pays $100 per point. That's if you're trading the 2420 blueprint, just looking for the $100 per contract per day. So from 1172, we dropped all the way down to a swing low of 1155.30. Okay. Again, on the 2420 blueprint, just 1 point from 72 to 71. That's sufficient to be done for the day. Okay. And that covers all of the markets from last night. So with that, we're going to head out to Vegas, talk to David from Page Trader, and also Jerry. So stand by. Going to pause for a brief station identification, and we'll be right back, so don't go away.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310. And we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
We don't need you now, be on your way. I thank the Lord for love like ours that grows ever stronger.
Good morning, Dwayne.
David, good morning. Welcome to the show.
Thank you very much. It's a real pleasure to be here, and I hope everyone's had an interesting week. It's been an interesting week and very active week in many of these markets.
Indeed.
Yeah.
What were your thoughts on the Fed announcement yesterday?
Well, I'm not a fundamental guy, and I'm not really connected up with all of the machinery and the nomenclature and all that with the Fed announcement. But my feeling has been since March, and I've mentioned it a number of times on the program, that I felt that they were not going to raise interest rates. I've said this several times at this meeting, and the reason, and I'm not sure if I'm right because I was right, or if I was just accidentally right about them not doing it. But either way, my reasoning was that it isn't justified by where the bond market is. The bond market is in no position to require a Fed interest rate hike. But having said that, there are other factors other than the mere bond market. Bond market's a big one, but there's many other factors they consider. Either way, it worked out that they did not have to. They felt they didn't have to raise the Fed interest rate, and fair enough. That leaves it in the position that we thought would be likely. Burwell has said on a number of occasions, or at least I picked up this from him, that it would be expedient to do it this year, not to do it in the election year, because the incumbent party, the Democrats don't, whatever that party is, Democrat or Republican, they don't want to have interest rates going up in the election year. But in a way, because of that statement, which is a pretty compelling statement as to why they might do this, because this whole administration is so political, I was happy to see that they didn't do it, and that they didn't do it probably for monetary reasons, for real, actual, effective reasons that have to do with the economy. So I'm happy to see that. And we've invited Jerry Fagnant to come on today to talk a little bit, because he actually knows about this stuff for whatever reason. I don't know why he knows about it, but he does know about it. Why would somebody want to know this stuff? But he does. And he's here with us today, and we can have him say a few things more intelligent about it perhaps than myself.
Yeah, let me open up his mic. Is he here with us now? Yes, he is.
I believe he is. I believe he is.
There he is. Jerry, welcome to the show.
Good morning, Dwayne. Good morning, David.
Hey, good morning, Jerry. Nice to have you here. We're talking about the Fed interest rate announcement yesterday and what its meaning was, and what's your take on it? Why don't you give us some of your insight?
Well, it's, there was obviously a lot of skepticism whether they were in a position to raise in this meeting, or whether they needed to kind of continue to fire a few little verbal warning shots that the rate hike is coming. I think there was, there'll be some debate as to whether the Fed is becoming more of a problem with this, keeping this uncertainty going, keeping the market on edge. They certainly seem to me, personally, they're managing the market more than they are trying to manage the economic data. That's just kind of my perspective. And I think they're beginning to lose a little credibility. So the uncertainty, it's interesting, obviously, as I mentioned to a number of people that I was talking to, the rate decision will be one thing. The commentary will probably once again be the market mover, and that's what it was.
The after the fact.
Yeah, right.
Yeah. The commentary.
Yeah, the commentary that, listen, we could still hike in October. The hike will probably be this year. Just keeping everybody guessing. When is it coming? Let's just, honestly, for right or wrong, just get one out of the way. Let's just be done with it.
Yeah, right.
But I think that they're still, obviously, by admitting that the economy is not where they want it, and I think, as I have said again on a number of occasions over a long period of time, eventually this is where we are. We get a floating or anemic economy that's really not creating robust jobs. Cost of living is rising. Labor is not getting a pay raise. People are still struggling. People are still hurting. The average person on Main Street is really not feeling any better than they were. And I think the Fed is concerned that raising rates, despite the fact that many have called, many of their advisors have called them to raise the rates.
And many influential advisors, many
that's what I mean.
Players.
Yeah, I've had the good fortune in my career to meet, spend quality one-on-one time with the likes of Bob Dahl from BlackRock, now with Nuveen and Bill Gross and Mohammed Al-Ari, and these are the advisors. These literally the people that speak to the Fed, and they've been telling the Fed for many months, we need a rate hike. We need a rate hike. You're going to wait too long, and we're creating this uncertainty, and uncertainty is not good. Uncertainty is the one thing that the market likes the least. It doesn't need it. It hates it the most. And this is what you get when you get a market that behaves the way that it does. A lot of people would say, well, we got what we wanted, no rate hike. Why are we selling off so badly? It's just that uncertainty that keeps the market on edge. And eventually we get to the admission that, boy, if after 9 years and after 5-7 years of recovery, I mean, if we can't raise rates a quarter of a point,
or an eighth, even.
Or an eighth, and without fear that that's somehow going to damage us, then is that not an admission? What kind of a recovery do we really have going on? Absolutely.
Yes, that's very well said.
You see, and this is where the market is getting to that point, saying, "My God, we really do have some major problems."
Huh. Yeah, no, that's a great point.
That's my take.
Okay, well, that's very interesting. We're in a very uncertain time with the economy. We have an election coming up where that's uncertainty as well. And I think the majority of the uncertainty is probably going to be unwound with the election, even though we will certainly have a rate hike probably by then. There's other uncertainty about the future of America and which direction we're going to go. Are we going to go into a greater government, larger, expansive government? And if we go on the Democratic side, because there's who's running on the Democratic, you've got Hillary Clinton, you've got this full-on self-avowed Bernie Sanders, socialist, cradle-to-grave entitlements, all taken from the money that the government doesn't print that money. It gets it from us, productive people, to then entitle others to have things that they themselves didn't earn. That's the whole basis of his kind of government, socialistic government. Margaret Thatcher, the problem with socialism is that you eventually run out of other people's money, meaning productive people's money, to take from and give to people for whatever the reason is. It may be a very good reason, but in the end, it's a very bad thing to do. It spreads a very nasty form of complacency across the land. And you find that America got to its greatness not through complacency, not through entitlement, but really almost through the exact opposite. And so we have people at the top now that really, we actually have a very popular socialist potential president. I mean, I already know we have a socialist president now, but we have one that is even potentially, I don't know if he's more or less, but he's going to act more on it potentially. So, that uncertainty for the United States of America, many businesses are not making decisions and haven't been making decisions, Jerry, for many years based on not knowing what this guy's going to do next. One of our big players here in Las Vegas, a fellow by the name of Steve Wynn, who's a very big visionary, did tremendous things for Las Vegas. I mean, is really a part of the history of Las Vegas, with the Mirage Hotel and now the Wynn Hotel and all of his great accomplishments. He was a Democrat, and it was Barack Obama that got him off that, because he said, I'm tired of having a target on my back. In other words, everything from the EPA all the way up through taxes and all the way up through every other kind of regulation that makes businesses harder to run. They're already really hard to run as it is. Ask any businessman. It's an all-day affair. It's an all-night affair to run, to be a business owner. And it's hard to be a worker as well. That's not to discount the great work that people do for businesses. But as the government grows and as more entitlements become necessary because of their promises to keep people voting in their favor, they have to take more and more from more and more productive people, and they have to make it harder and harder. And finally, you end up as Greece did. That's how you get to where Greece is you keep entitling people who are not being productive with productive people's money. It's not fair, number one, and number two, there should be some entitlements, but the mindset of these people, like the Bernie Sanders and the Barack Obamas, is it's endless. It just doesn't end. They just want more and more of it, and that forces people like Ford and other companies to start leaving the United States to manufacture elsewhere, where they won't have, cumbersome regulations, where they won't have, overburdening regulation of one kind or another on their business. So are we going to go more in that direction as the United States, or are we going to start cleaning up the mess that we've made already? Because if we go more in that direction, we're not cleaning it up, we're making more of a mess, spending more, entitling more, going more into debt. None of these people go home, these politicians, and tell their kids to take credit cards out and rack up debt and then put out more debt. They don't do that. They act exactly like conservatives do. But when they come out of their home and stand on the pulpit, they speak an entirely different game, telling and directing the government to do things that they would never do in their personal lives. And ultimately, it crashes and burns. So there's a great deal of uncertainty. Businesses don't want to invest. Capital expenditure is down, so on and so on and so on, because of all of this that we're talking about. So the uncertainty doesn't end just with the rate of the bond rate and the interest rate. The uncertainty ends, or will begin to turn, I think, when we have a new president. That's my take on it. That's my show. Good night.
Yeah, that's about the size of it.
Yeah, I think so.
No,
I think
I think my fear, David, and we've seen this certainly as a growing trend, and individuals following the business model, which is to simply just leave the U.S. and give up their citizenship and move their money offshore and to avoid taxation, because they're sick of the, again, as a shrinking tax base, they've got no place left to go to fund the entitlements except to that ever-shrinking base, and just hit them with more and more and more. And I think that you'll actually see, if this trend continues, especially with another Democratic administration, that you'll see the wealthiest people in the country begin to relinquish their U.S. citizenship. And
you really think so?
Absolutely. Yeah. Actually, this quarter actually saw a reduction. But if you look at the number of people moving money to offshore banks over the course of this year, it's been astounding. It's a growing trend. The one percenters are leaving. They want nothing to do with it.
Huh.
Yeah. I think you'll see that continue to happen over the next many years if we continue down the path of socialism, where we just go after the so-called 1%. 1% of the population. I may be off a little bit statistically, but 1% of the population, and again, believe me, I don't fit into the 1%ers, but the 1%ers are paying more than 60% of the tab as it is, and the top 20% of the U.S. population pay in excess of 80% of all the taxes, and that's just that's the evidence of the shrinking base. And and at the same time, we talk about Barack Obama and the healthcare bill. There isn't anybody who avoided a tax increase with that puppy.
Right.
I mean, every working man and woman saw their paycheck shrink by the increase in the Social Security tax, the Medicare tax, to help pay for that. Mm-hmm. And so, even though he promised only tax increases for the wealthiest Americans, that wasn't true. We increased everybody's taxes in a very insidious way.
Right. Well, he hasn't done a lot of things that have been very true, and it has been very tricky and very slick and so on. And that's another problem, is that there's a lot of trust issues with the administration and so on. So certainty comes back when people become more realistic about the responsibilities that individuals have to participate in America, and not just simply be an entitlement state, which is what we're headed towards with these kinds of things. Socialism presents itself as a plan for society. It's really a scam to get a certain number of people in power for a long period of time. It's a way. That's all it is. It's just a scheme with which a group of people will stay in power for a longer than usual period of time, because the people feeding from the trough are going to vote for them, and they don't care that it destroys. That's how conscienceless they are. They don't care that it destroys the host, like cancer eating up a person until they die, and then the cancer has to die as well because the host has died. They don't care. They just want to be in power for as long as they can.
It's the very reason, and it's the very reason that you see at the top of the Republican polling right now, Mr. Trump, Ben Carson, and Carly Fiorina as your top vote getters, because listen, like the way they speak or not, they are not established politicians, and there is a growing surge in the U.S. that wants nothing to do with the career politician anymore.
Right.
They don't trust any of them.
No, because Barack has really brought it to such a pinnacle. He did such a good job of swindling people with his innocent smile and his smooth silk shirt moves and his soaring rhetoric, only to find out that they bid it again, that they have been disgusted by the whole business. He has damaged really good politicians that wouldn't do that in his attempt to get to the office, maintain his power, and so on. Yeah. So the sad truth is that America doesn't have a chance under any set of conditions that look anything like socialism. We have to have an independence. We have to have people that are productive. People have to participate in the society. They cannot be a large body of people just milking the less and less numbers of productive people, and at some point there's finally just a collapse, and the whole United States of America goes away. I mean, that's where it goes to, and it's all to further a small group of people's desire to be in power, not based on their ideas being better than someone else's, but based on the fact that people will want to continue to get free money and services at the expense of others. That's the insidiousness about it. It's not a battle of ideas. It's a battle that can't be won. Ultimately, once you have a large group of people in the United States, let's just say a bunch of illegal aliens getting all kinds of benefits, who are they going to vote for? Who are other people going to vote for? They're going to vote for the people giving them those benefits. So it's not a battle of what's best ideas for America. It's a battle of nothing of the kind. It's just we're just going to take it from you. These people are going to keep us in the office.
It's the battle of who can pander the best.
Who can pander the best, and that's what the game is. That's why there's something really wrong with the far left. It's because that's what they want to do. That's where they want to go. There's some really great Democrats out there. I've said this every time I bring this up. I'm really talking about the far left, of which our president occupies that place, and his administration. So there you are.
Well, yeah, Anna had said, are we not getting close to where we have more people with social benefits of one kind or another, and they will, as you just were saying, always vote for the government who gives them the most?
Yeah, they're not going to bite the hand that feeds them. And we are at that, Romney's famous 49%.
Yes.
That did him in. And yes, we need to lift all people up. I'm a firm believer in lifting people up, but doing it the right way through education and hard work.
And limitations. We're going to give you, even Bill Clinton came up with a program that said if you're out of work, we're going to give you this much for a period of time anyway. Remember, unemployment had this much time period to it. And then after that, or during that time, you had to go get training. You couldn't just be taking unemployment. You had to be doing something to better yourself. And that was taken away. And the reason, guess who took that away? Guess which party took that away? So obviously, that was the kind of thing that is what you're talking about, Jerry, which is to give people a hand up, but they have to put some effort in it themselves. It's not just a handout. They have to do something. They have to stay productive. You get people used to being not productive and living off others, and America goes down the tubes. It's just that simple. There's no big scientist needed to tell you that.
That's exactly right. And again, the message is, it's challenging. It was funny that we had the Republican debate in the Reagan Library, and of course, Ronald Reagan was a great Republican who did believe in lifting all people up and had a phenomenal message of hope coming out of a double-dip recession. And, I find it interesting that I think people, again, are gravitating finally towards, Bush said it, I think, the other night, and everybody wants to say it, we're at the dawn of America's greatest century. And that may be true, but I think people are beginning to gravitate towards the candidates who are saying, listen, we've got a really, really tough road ahead of us, and we've really all got to roll up our sleeves. We're all going to bear some pain in this. This is not going to be an easy fix, and if we want to fix this for our children and our grandchildren, we better hurry the heck up and do it. Because I'm one of those people.
Right.
I worry about my kids. I worry about my 2-year-old granddaughter. Not for the first time in generations. I've been saying this for years. My kids will not have it as good as I have it, as good as I've had it. We can all say that. It's the first time in generations that we unfortunately are in that situation.
I've seen your backyard, Jerry. You have it pretty good.
I do. I do have it very good, and I've been blessed. I have been blessed in my life. I really have been blessed in my life, but my kids know that comes through hard work. Listen, like you, David, I barely got out of high school. Okay, and I worked my butt off. I apprenticed for an individual in this business, in the financial advisory business, who saw something in me, who saw my ability to communicate. I was self-driven. I was self-disciplined, and he gave me an opportunity that I look back on. And that, again, it wasn't out of handout. I was a bartender, and he saw something in me and taught me everything I needed to know about the business that I spent 30 years in, literally gone from a large family, one income parent, very difficult time growing up, and understanding those values, and as a young man getting married, struggling, and someone gave me an opportunity, and I took that opportunity and made absolutely the best I possibly could out of it. And that's the best example I've given to my children, and they know that they've got parents who support them in every way, shape, or form, but treat them no differently and say, listen, but you can't just sit back and wait for the handout. You've got to get out there and make your way and go through your struggles, because that's the only way you're going to do it and do it right.
That's right. Yeah, in the end, most people do have to go through some form of struggling. You just can't save them from it. It's almost like saying in trading, everybody has to go through, some losses. It's
same
in trading
thing, David.
well. It's in everything. It's in everything.
Yeah.
You have to go through it.
And I think one of the reasons I've been able to help the traders that I communicate with on a regular basis is because I make no bones about it. I've done it all. I've succeeded. I failed miserably, and I succeeded again. And it's through those successes, doing it right and doing it wrong, and losing vast amount of money, and doing all the things that just go hand in hand with that, and then having an awakening and buckling down and doing it right. So it is. I don't think anybody personally, and maybe I just haven't met him yet, but I haven't really met a very successful trader who hasn't wiped out.
Yeah.
And that's true in life.
Yeah.
True in other
that's
areas
true in
as
life.
well.
True, absolutely true in so many other areas.
Yeah. Are there the few people that in life they just wake up and they just have a great run of it? Yeah, it's really rare. It's really rare. Most people do have to struggle, and the struggle is part of finding your real, super, super deep self in a way, because you got to reach in deep sometimes. You're not playing at the frivolous levels anymore when you lose big money or you have some catastrophe in life that you really have to reach in deep. And those are growth periods for people. They come out of those as a phoenix rising from the ashes in many cases, as you and others have done. And
the failures don't define you.
No, they actually create you.
It's what you do with those that will define you.
Yeah, it's what you do with them that makes the difference. So, Dwayne, I know you have other guests, and if you want, I'll take with Jerry on here. I'm going to go to the charts real quick, and if we can, and I'll get those out of the way because I kind of wanted to do a quick review.
Yeah, let's do
And,
that.
Jerry, you
No, I
can
don't have
comment
anyone
on
that's
this.
coming on today, but yeah, let's go ahead and get to those. There was a question. You want to start with the S&P or?
Sure, however you'd like to do it.
Okay.
Go ahead. If somebody had a question, maybe I can answer it real.
Oh, Ed had asked if you have an indication for a bottom in beans, soybeans.
I don't have any indication at this point for beans. I went over it with some of our clients, and we're just waiting right now for another indication in beans. So, we're looking for something a little larger that we can forecast with, and we just don't have it at this point, other than the fact that the beans are in a decline off of a recent daily reflected wave top that we unfortunately didn't take advantage of. So we let that go. But I'll run through the charts first, and then if there's any other questions, if somebody wants to ask them, we'll do that. And Jerry, if you want to throw something in here, you can as well. Let me just go through this. This is basically is our week, not necessarily in the order that it happened. First thing I want to point out, we did have a small loss this morning in the S&P. We had instructed or indicated to people that the S&P's normal position, as far as we could tell, would be to come back down and test 1950 to 1949 into midday. You can see that they're trying to do that. We got down to 1950, 250, but really that isn't the completion. They just really weren't able to do it. And on the way there, they sort of ran up here, and that stopped us out at 63, 64. So we just had to deal with that. That's occasionally, the market may still do the move that we're thinking, but it isn't. You have to manage your risk and so on. We felt that this whole trade, although it was about a 10 or 12 point trade from where we were getting in, it really didn't deserve much more risk than what we gave it. As it stands, we got out and the market did start to come down here. We'll see how they continue with that. Putting that aside, we had a really fantastic week. Probably, if I can say so, the largest number of individuals that are with our company doing our longer term trades that were successful this week, because we monitor that, and the largest number of people that had large gains this week. I think, Jerry, would you say that's a fair statement, that it's the largest number of people that had large gains for this week that we've seen? Something like that?
Yes, been a fantastic week.
Yeah, I mean, really surprising. Let me show you a few of the trades that we had. This one on the right here, this trade from Crude, this actually was a result of a conversation between Jerry and I that got out to customers, so it wasn't public to the whole group, but we were calling for crude oil to be shorted at 46.85 for a decline to 45.50 into Friday. We were thinking about putting it out, and ultimately Jerry, in a conversation with several of our clients, gave it out, and it did go down, and we did get down to 45.06. It's beautiful. Very happy to see that complete. We'll get to some of the others. This is one of the big ones, and Jerry, you can throw in on this if you want to. This was on Friday, September 11th. We notified everyone that the daily close above 1950 on that day indicated that the market was going to advance to 1994 to 1996 during this week. And did you not have a number of people in this trade, Jerry?
Yeah, I think there was probably 20, 25 direct conversations that I had beginning early Monday morning, Sunday night actually.
So tremendous gains were made in this move, and people knew to hold for the 1996, and we even called for 2005 to 2007 as a real possibility. They did reach that, but I'm not taking claim for that because that wasn't actually part of the forecast. So that was a fantastic move that completed there. We also earlier this week had September 14th on Monday, the December dollar was about to advance to $96, and ultimately it went up to 96.01. We're about to issue another trade for the dollar as well. This was the S&P on Tuesday, looking for a 7-point decline from 1970 down to 1964, 65. That completed. Let me see if there's any. This is earlier in the week. I mean, this was the week before. In the middle here, this was, of course, the trade. And we're still looking for the market to go down and complete the, if they can, the 50 to 49. But because we got stopped out, we did not reissue this. This is just we're leaving it alone to see if they can complete it. In the second chart here, we have December gold should firm up on, this was on Friday, last Friday, should firm up on 11.12 and then test 11.19 into early this week. and they rallied straight up and did 11.1930. Beautiful call for gold. I want to switch over to the charts. I'll show you the more gold because we had a lot of stuff in gold this week. This was the Russell. We had given out that the Russell is likely to test 1171 to 1173 until Wednesday, September 16th. We did that on Tuesday, and on Wednesday, a day after Wednesday, on the 17th, they completed the 1173 target. We didn't really trade this. This was just a call that we had made, so fair enough. This was crude oil on some Monday of this week. Buy October crude upon an hourly close above 44.45 to take initial profit at 44.90. We were stopped out of this trade. We had two actual losses this week. One of them was this, which was really barely a break even, and the one that I just showed you in the S&P. We got our initial target. Ultimately, the market did do the 45.20, the actual target that we were expecting, and higher. But this was a larger than usual pullback, and it indicated a larger advance, but we were out of the market at that point. This was Monday, September 14th. S&P is likely going to test 1947 to 1946. 7-point decline here. They got down to 1942. This was Tuesday of this week. S&P should test 1956 to 1958 to 59. They did that. They got up to 61. 6-point gain. This was gold on Monday. December gold will trade at 1116 to 1118 on Wednesday, September 16th. So people that got in here, we're not waiting for an after-the-fact confirmation and saying, look where they went. We're saying in advance where gold is going to go, and they right on Wednesday, September 16th, advanced to 1116 to 1118. Profit target right here. That was a fantastic trade. This was another gold trade to go down to 1117. Further test of 1118, 1117 is expected in tomorrow's session. This is a 60-minute chart. We were able to hold on with that. This is an older chart. And then here we've got yesterday, after we picked up 30 points on the upside. This was a great trade, the long trade from 1950 up to 1996. We indicated to our clients that the market was going to go down to 1950 into today. And we did that before the market peaked out. This was given out prior to the Fed announcement, that the market after the Fed announcement would go down. And on your radio program yesterday, I mentioned, Dwayne, that the likely move was that the market was going to go up into the Fed announcement and then go down. That was the normal thing to have happen. But I didn't give out the full details that we were looking for 1950 to get reached into today's session. The market, to be sure that we were right, we took a short on any hourly close or any break of 76. This is where that happened. And the market went straight down, and the Globex completed 1944, and our pit session low is like 1948 or something today. And you can see the market's attempting to go back down now to complete the original target that we gave out earlier today of 1950 to 1949. So that was nice. We had a 30-point up move with real traders in it for real 30 points, and a 25-point down move on the downside today. And it was just a fantastic set of gains that is a result of volatility. On Friday, September 11th, we gave it December gold is expected to advance from 1100 to 1098 up to 1136 into next week. So remember, when we are talking about this is what the market looked like on that day. And we forecast that this week, the week of September 14th, gold would trade at 1136. That's 36 points higher than it was at the time. Yesterday's high was 1136. Today they moved higher. They got to 1141. Jerry, you had people in this throughout the whole group as well, if I'm not mistaken.
Yes. Yep. No, we did. We bought actually near the low of that first green candle, right around the 1105, 1106 area.
Yeah, for a run up to 36.
For the run up to 36.
Yeah, it was just an amazing thing. A couple other ones real quick here will be done in a second. On September 14th, the S&P should test 1936 to 1935. From here, we had a little sachet up to 1940, and then it went right down to 1936.50, effectively completing that target. And this also was a very interesting, although it looks like the same trade in gold, but it isn't. Back on Monday, September 7th, we had issued that December gold, which was then trading probably more like around 1123 or 1125. should bottom on September 10th, plus or minus a day, and then advance 26 points off that low. And so the market continued lower, 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 and on September 11th made a low at 1097, and we were forecasting that it should advance 26 points, and it did. It ran straight up on the first day that it rallied to an exact 26-point high at 1123.70, which is 26 points higher than 1097.70. So beautiful initiating move for the larger forecast that we had in gold. And for those of you that are curious and interested, we do believe that gold is going to be still going higher, even though we may have a short-term, possibly, pullback, depending on how they close today and some other factors. We think gold is going to go higher into the coming months. So there's really, there's some interesting stuff on the upside. So there you are. That's everything that we did for the week. If you have an interest in checking us out, you can do so by going to our website, which is pagetrader.com, Pagetrader. And our phone number is 888-231-4702. You can give us a call. You can also you can talk with me. You can talk with Jerry. You can talk with Shirley or anyone else here about getting started, and take maybe a trial and just watch what we do for a couple of weeks and see if it fits into your outlook for the markets and so on. Dwayne, are there any questions or anything else that you wanted to cover today on individual markets? I don't know if Dwayne is still with us or not. Jerry, are you still there?
Yeah, no, I'm still here. I'm just getting
I'm
the
here.
charts back. Yeah. Hang on just a second. There we go. Okay. Alrighty, let's see what we got in the chat box here. Please ask David if we have it's from Ed W. If we have a daily bottom in the U.S. dollar things.
I think we do have a daily bottom in the U.S. dollar, and we're looking potentially to go, if I'm not mistaken, long. I don't have those charts up in front of me, but I think we checked. Jerry, did we talk about that? Is that something that you recall?
We do have an indication. I don't believe we've put it out as an official trade, but we do have an indication.
We have an indication
Correct.
for the bottom, right? We haven't put that into a trade yet. So Ed, the
That's
answer
correct.
is yes. That is correct. So there you are.
Okay.
Any,
Let's see. Okay, I guess Ed T had basically the same question. Are you able to share any details on the potential of a dollar trade? So.
Well, we don't have it put together, and it's going to take a little time. It'll be that would be something you would ask on Monday, and I would also offer you that we give out as much detail as we can on this program, and sometimes we give the whole trade out on this program. But I do want to say that you'd be probably better off if you got into a trial or did something where you could get the full information if you're really concerned about the dollar and want to trade it correctly. Toward the kinds of targets that we're talking about, that might be a better choice to really dial it down.
Okay, Tim had asked, did you forecast a move back to 1950 because the S&P regained a square?
Yes, there's a important thing called the regain square, and it's part and parcel to our methodology. In fact, we're teaching that on October 10th and 11th here at the Mirage Hotel. Those of you that are coming will be able to put that technique at work. You'll also get to meet all of us, and you'll find that the premise, the regain square premise, is so powerful it can be used virtually alongside just about any other. It has to be there. It has the condition has to be there, but it is part and parcel to large directional moves occurring in the markets.
Okay, Bruce asks, anything on crude now?
Nothing new. Jerry is the one that actually gave out the crude indication, and I haven't had a chance at this point to go any further into it. I know that we were looking for crude to go down to $45.50, and they've completed that. I just don't have anything further beyond that at this moment. So that's another one. And again, I would would say if you want to really get into it, if you're in a trial, you'll get that information directly. But we do come on this program. I do want to say I give out as much as I can without angering the people that are in, that actually are subscribers. We have to be careful. And once in a while, we just give the whole trade out on the program because I want to do it. But I have to take the heat for that as well. So.
All right, guys. Well, that's all I've got for questions in the chat box, so let's call it a Friday.
Well, there you are. Jerry, anything else you want to add on anything fundamental or any other indication that you had on your mind?
No. I want to thank Dwayne for having me on as a guest today. I really appreciate
you betcha.
Anytime.
Anytime.
Enjoy talking, and hope everybody has a wonderful and safe weekend. And, we look forward to some interesting volatility going forward.
Yeah. Certainly, we know for a fact that next week the volatility is going to continue into next week. There's no doubt. While we've been talking, by the way, the S&P did get down to the 1950 level, 50.75 so far. That was the move that we thought was expected, and we felt that would happen prior to a gap closing. They sure looked like, and that's what got us out of that trade, is they looked like they were maybe going to go do the gap closing. But as it works out, they just spiked 56, 57, and then, or 6, whatever the number was up there, 66, 67, and then they turned and did what they normally would do. And I'm glad to see that. And this now allows us to maybe put out another trade now that we've got that out of the way. So, Dwayne, thanks for having us on for me as well. I hope everyone has a great weekend, and we'll plan on being back here with you on Monday, and we'll put it all together at that time.
All right, David, sounds good. Jerry, you have a great weekend. Guys, it is the weekend to all of you, so spend some quality time with your family. I'll see you all in church on Sunday. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.